Welcome back to another episode of Freedom Finance with Lanny. Guys, I wanted to get some content out with you guys to tell you exactly how I invest as the stock market, with the stock market at all-time highs. Not near all-time highs, not almost at all-time highs, not all-time highs at some point in 2024. No, they are at all-time highs, and I'm going to show you how I'm investing and why I'm investing the way that I am because of all of the reasons and things that are happening right now in the economy. And hopefully it'll help you make that decision as well, because I'm sure I'm not the only one. How do I invest in a market that's at all-time highs? That's a question that I'm getting a lot via friends, through text, phone calls, Twitter messages, some YouTube comments. So I'm here to just be open book, be transparent, because it might help you answer your own question, guys. So grab your favorite beverage, your beer, your liquor, your wine, because you're Italian this weekend, baby. Maybe a little espresso, whatever floats your boat, guys. So let's check out how I'm investing with the stock market at all-time highs. Let's get it. All right, guys, stock market's up. S&P 500 is what I usually look at. They're up over 8% so far in 2024, and we're not even done with the first quarter yet, guys. I mean, I know what you're thinking. Can the market keep it up? I don't know the answer there. Shock factor, right? Now, if you remember on a prior video, a few weeks, possibly a few months back, I broke down what happens if the stock market, what happens in the year after if the stock market returns over 20%. In 2023, the stock market returned well over 20%, 24 plus percent, I believe, in the S&P 500. The year after that happens, 65 to 67% of the time, the market returns positive. So there's another positive year after a year of 20 plus percent returns. So more than likely than not, this year will finish off positive. You have 2/3 of a chance that it's going to finish positive, and having the market up already over 8% more than likely will lead us to victory there, right? In the words of Browns fans, victory Monday. But we're also in another unique year. This is an election year. And what does that mean? Well, I believe it's 19 out of 23 times, and I'll throw some data up here for us. 19 out of 23 election years, the markets returned positively. And in fact, I believe the math and the analysis will show that it's at least an 11% return in an election year. So when you already add in the combination of 2/3 chance, I'm just starting to sound like, Big Papa Bump, Scott Steiner over here with my math, but we've got 2/3 chance that it's going to return positively. It's also an election year, which 19 out of 23 times, or 83% of the time, it returns positively at an average rate of over 11%. So you already have a bunch of factors that would lead us to believe that this year is going to be a positive return. Now, I think the question, though, is, what am I doing? How am I investing in this all-time high stock market? I keep it simple. I use a KISS method right now. Keep it simple, stupid. And it's a combination of the fact that with my work, my hours are far limited right now to really evaluate the right individual stock. I'm not trying to time the stock market either. As we all know, it's time in the market versus timing the market. If you would have thought you're at, oh gosh, the market can't be any higher than what it is now, like last year, you missed out on all of last year's gains. If you went into this year thinking, oh, the market can't do anything else, well, you've already missed out on 8% returns. And to everybody out there who's like, why are you investing when you can get 5% in a money market fund? Well, if you would have just invested everything there on January of 2023, you're up over 30%. So don't try to time the market. And now the other big piece too that's hanging right now is Papa Powell, the Federal Reserve Bank, interest rates, right now there's about a 60+% chance that we'll see one in June of 2024. Now, what that should do is explode the markets too. So you've got not just history showing you that it's usually a positive year, not just the election result years for the S&P 500 that they're positive result years, but the interest rates are at its peak and they're staying a little bit higher for longer, but then there's still those options to have interest rate cuts that would send the market roaring. So what am I doing? I'm sticking to my favorite 3 ETF Vanguard strategy. Vanguard's S&P 500 VOO. I'm buying it still every single day, guys. I haven't stopped. I'll have to do a 2-year recap on what that looks like now, because I'll tell you what, it's looking very nice. $60 a day. Yes, I'm crazy. Yes, I'm nuts. VIG, Vanguard's Dividend Appreciation ETF, giving you a little bit higher dividend than the S&P 500, but still giving you that overall return factor. Buying them every day. And then because I'm on a journey to build that passive income, trying to get to that financial freedom, I am still buying every week Vanguard's High Dividend Yield ETF VYM. But when it comes to individual stocks, so I'm doing that. Market's at an all-time high. I'm buying the market. That's what I'm doing. I'm not trying to say, I'm going to wait. I'm going to wait it out. I'm going to wait till it drops. No, I'm not. I've been doing this long enough to know that you can't time it. Now, for individual stocks, and I'll mention a few here. Buy quality, buy names buy names that have been through everything, and also buy brands that make sense. Like right now, I feel like there's a lot of value in Starbucks, SBUX, trading at or below $91 a share. Their price to earnings ratio, which is a valuation metric, is definitely lower than their historical point. And then you have a Dividend King, which is a dividend stock that's paid for over 50 years straight without stopping. It's Pepsi. Ticker symbol is PEP. The combination of the snack and beverage brand, plus the iconic brand in of itself, known internationally, showing some very good metrics with the yield now over 3% and a historical dividend growth rate that's at or above 7%. So you could just buy quality as well. You'll never be mad for buying a quality stock or a brand that you like and love and know other people and businesses use. So that's kind of how I would approach it as well. Don't reach for yield. Don't reach for a stock that might be undervalued, but maybe has a spotty history. I've been down that path where I've reached and I have failed. So I stick with my ETFs, sticking with high quality, well-known blue chip dividend growth stocks that have been around and been doing it, have been through ups and downs and cycles and all sorts of economies. So that's what I'm doing, guys. And hopefully all that data and then me telling you kind of how I'm investing in the stock market, again, do your own research, not professional advice, but hopefully helps you make a decision, hopefully helps you kind of ground, whatever's going on in your thoughts, in that brain of yours. But question is what are you doing? How are you investing with the stock market at all-time highs? Are you keeping it simple, buying ETFs no matter what? Are you trying to time your investment purchases? Are you just trying to find undervalued dividend stocks as well and buying when the opportunity presents itself? Let me know below, guys. Again, shorter video, but like it, subscribe to this channel. Curious on your feedback, guys. Thanks for rocking with me, and I'll catch you on the next one.